Hey traders, welcome back to another video. Today we're going to be talking about letting winners run. Now this is a subject that we hear a lot as traders, especially when I was a newer trader. I always heard people say, let your winners run and cut your losers short. But what does it mean and why is this effective, or is it even effective at all? Let's talk about this concept. Make sure to leave a like down below and subscribe to the channel if you're new. Let's get into it. Hey traders, welcome back to my YouTube channel. My name is Nick. I talk mostly about trading and investing here on my YouTube channel. I run a small business where I essentially offer trading services to traders and investors around the world. And I am a trader myself, and I have had this question for a long time when I was a newer trader. When I was first getting involved with trading, I always ask myself, well, why do people say to let your winners run? And what does that really mean? Well, if you've spent some time in financial markets, I've been trading for about 5 years. I've started out in the stock market, and I eventually made my way to currencies and now trade both as part of what I do for a living. Now, here's the thing, letting winners run. What does that mean? Well, I guess if you stick to a very simple definition, it means that when you're in a winning trade, you hold it for longer, and when you're in a losing trade, you hold it for shorter. So this concept of letting your winner run, right? If you take a trade, let's say that price comes down to a level, you decide, okay, I'm gonna buy into this trade. If the price goes in your favor, the definition, or keeping it very simple, would be to keep holding it. Right? Obviously, you wanna be in a big trend, and you wanna hold those big concepts. And then when things get bad, when things go against you, you stop out very quickly. And in theory, this really makes a lot of sense. If we think about it very logically, what this is going to do is it's going to allow us to catch the really big stuff that makes a big positive increase to our account on the big winners. But then the best part of it possibly is that it stops the losses very, very quickly and gets us out of a trade. Now, this concept of letting winners run, the important thing to note here is that there is not a perfect all-fitting definition or way to do this. That's the reason I want to make this video, is how can the average person who gets into trading actually let their winners run effectively? Because you might say, well, okay, what if I just put a stop loss underneath the move here? Well, the idea here is that then there becomes the debate of, well, if I put a stop loss here, well, what if I put it there and I'm just getting pegged out of the trade before the market rallies strongly? Or what if I take a trade, right, and then I put my stop loss far away so that I have a better chance of holding it into something like this, right? But then when I take losses, I take big losses. I don't know if that's happened to you guys, but I know that when I was a newer trader, this was a constant struggle. And the worst thing was when I would set a stop loss, price would come down to my level, hit me out of the trade, and then shoot in the right direction. Has that happened to you? I'm sure a lot of you have experienced that, because I know that's a very frustrating thing. So, but the definition, going back to the concept, is that, okay, well, if we want to let our winners run, we have to stop out of the losses quickly. The winners run part, in my opinion, is not as important as the losers short, right? Cutting the losers quickly is really, really important. Now, there's a couple different ways that you can cut a losing trade. Of course, you can use the stop loss, and that is typically the most popular way to do it. Another way to do it is a timed stop out, right? So if you're in the losing trade for more than, let's say, a few hours, you cut it no matter what, right? That's another way that I know some traders will do, right? So let's say that they get into a buy trade, right? They take a buy right here, and the market just kind of goes down, and not too much, but it just kind of goes down and sideways. Well, at a certain point, they'll just cut it, right? It's not going the way they want it. It's not a winner, so we cut it, right? Going back to our definition, letting winners run, we are going to cut trades that are not going to be winners very quickly and very long term, right? That's the idea of letting your winners run. Here's the downside. When you let your winners run and you cut your losers short, what inevitably happens is you have a lot of losers and you have very few wins, okay? And for a lot of newer traders especially, I know I struggled with this for a long time. Having a lot of losers is mentally exhausting. How many of you have taken trades and you buy the market dip and the market just tags you out of the trade, you take a stop, and then you wait for another opportunity, you're patient, you're looking for the right setups, you see another pullback, you say, okay, I'm getting long, I'm gonna buy into this market, and then it happens again. And it keeps happening. right? Eventually, this gets mentally exhausting for a lot of new traders. But maybe the reason that letting your winners run potentially has so much merit, can actually really work, is because most people can't handle the losers, right? Most people can't handle losing so frequently. Because if you want to go for the winners, the big winners that run are not every trade. In fact, what we can do is we can talk, generally speaking, about what markets look like. They mostly look like this. They're not always perfect, and every once in a while you see big trends come into the market. Sometimes you see consolidation. Actually, most of the time you see consolidation, and every once in a while you get these big trends. So if you're going to be letting your winners run, every once in a while, you'll take a trade that looks something like this, and potentially you have the possibility of seeing something really trend in your favor. And this is where the traders who let their winners run are really going to cash out big. They can take profits at potentially things like 3 or 4 to 1 risk to reward, right? So if you took a trade here, a buy trade here, you put your stop here, right? And you put a target, let's say here, then your take profit is much bigger than your loss. So yes, you'll be taking losses frequently because you're naturally going to have more times where the market whips you out, and that's okay. The point here is that the winners are likely going to carry you if you have a decent strategy. Okay, so that's what we're talking about here when we're talking about letting the winners run. But why is it so infrequent? Why is it so mentally taxing to let your winners run? Why can nobody do it? Well, if we actually take a look at a traditional curve, this is something that you probably have seen in math class, right? You can actually take a look at a lot of the market movements, and you can go do the data studies. I've seen a lot of videos out there that have studied the way markets move. And a lot of times, most market movements are not super predictable. Most market movements is a lot of noise. We have a lot of back and forth in the market. We have a lot of just, stuff hits the news, and then we see a little consolidation, right? We see a lot of back and forth. So a lot of the market's moves are, not to say completely random, but mostly random. We see a lot of movements that are just not really, they're just kind of noise, right? Fake news comes out, real news comes out, we get back and forth stuff that hits the news, right? And so that can cause some short-term volatility that a lot of times comes out just to noise. And so most of that is gonna fall into this big category here. Now, I'm not a mathematician, and I know somebody who is better at math than me will probably make fun of me in the comments. But the point here is that, generally speaking, a lot of the market's movements are just gonna be back and forth. They're not gonna be super directional. And then every once in a while, we get stuff on the ends here, the tails, if you will, of this move. And it could be a super negative or super positive trend. Okay, so when we're talking generally about market movements, we're talking just generally the market's movements. A lot of the movements are just back and forth, not really super decisive. And then every once in a while, we get something that looks like this. We get a big trend to the upside, or on the contrary, we see a big trend to the downside. And in these moments, this is where the letting winners run, or another word for it is trend follower, somebody who really truly lets their winners run a lot of times is a trend follower. This is where they're gonna make their money. And the cool thing is that there is truly no limit to the potential of what a trend can be. This trend, and the really big ones, could look something like this. We could see trends, 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 and just keeps going. And this is where the very rare scenario, this is where the traders who are letting their winners run are really going to cash out. But in order to get this, in order to capture those huge movements, I'll tell you my opinion. It's not some secret indicator. It's not some secret formula that's going to tell you when those are going to occur. What's going to get you to be in those winning trades like that is dealing with the bad trades. You don't get the good without the bad, generally speaking, in life, in my opinion. You don't get to have pleasure without pain. You don't get reward without risk, right? So when we're talking markets, when we're talking about letting your winners run, you have to deal with the losers. You have to deal with the whip outs. You have to deal with the fake moves and all of that, right? That's part of the game. So if you want to capture those massive, massive moves, sometimes you have to go through a lot of noise and a lot of junk to get there. And that's where, when you're patient enough, if you can deal with the losing trades, sometimes this can be the best strategy for people who are looking for those really big winners. So the reality is that somebody who truly lets their winners run, their equity curve on their chart or their account is not going to look like this. That's what everybody wants, but that's never what it really ends up looking like for most traders, okay? What actually a true, trend follower or somebody who lets their winners run, it's going to look something like this. Lots of losers, 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 big winner, losers, 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 big winner. You guys get the point. And this is not as attractive to a lot of newer traders. They say, well, why can't I just have it go like this, right? Or why can't it just look like this, right? And the reality is that in order to, again, going back to our concept, in order to get the big winners, you have to go through the small mini losses, right? Big winners come to those who are really patient. So this is generally the concept. And as I mentioned, there's many ways to do this. You can use a tight stop loss. There are people who use a time stop loss. There are people who use all different ways to cut those loser trades, which is the important part. And then there's also ways to hold a winning trade, right? Sometimes people use Bollinger Bands. So you buy a break above and you hold it until it crosses back below the midline, right? That's one concept that's pretty popular. Another times people just use a 4-to-1, 5-to-1 risk to reward. They use a large take profit relative to a very small stop loss that they think has a pretty good chance of holding and not getting hit, right? So if you can play that game, if you have the patience to let your winners run, it really can be a pretty rewarding concept. Let me know what you guys think down below in the comments. Give this video a thumbs up. It was a lot of fun to make, and I hope that you guys got something out of this. This is one of my favorite concepts to talk about in trading. So let me know what you think down below in the comments. Thanks, guys. We'll see you back next time.